Welcome to Profiletraders. This is Reza and you're listening to my market analysis for December the 3rd. Today was a very big day. We had the whole stimulus package from Europe being released and announced. You had also comments from the Fed here, and the mix of the two together made this market go crazy. But before I go into analyzing the day of today, let's look at what happened here in the big picture. You remember that not long ago I was talking about the possibility of a bull trap being in place, and this is how bull traps work. This day, which is on the 30th, we closed very bullishly at the top of the day. Then they maintained the overnight very tight up there, allowing a whole bunch of people to go long after this very bullish reading. And then the next day when they opened the market, they spent a very good amount of time rotating in that overnight session so that enough people continue to accumulate. As you can see, very big volume. And then suddenly they started a sell-off which came in with a close at the very bottom range of the day and a close below the low of that very bullish session. So when something like that happens, a whole bunch of late buyers get caught, then they pull the plug on them and everybody is trapped into a bull trap. And then the rest is history. Today what happened is that we broke the bottom of that trading range that I was talking about the last time. This was the trading range bottom, right around 2081. So we came, tested it, held, went up, and then as it retraced into this last leg of drop, the seller came back very aggressively and sold it down. And this was on the back of a very important event, which was the collapse of 30 years bond. Literal collapse. So basically what this did is that it told the Fed, this time there is no more messing around, that this time either you hike the rates or not, we will force your hand, because we are sick and tired of this situation of back and forth and uncertainty, and we want action. Either you take it up or not. Bond market sold to an extent that rates were completely forced up, and then as rates went up, obviously pressured the market very drastically and directionally to the downside. So now with this massive amount of selling that came in today, obviously we are in a very short-term downtrend. And as such, we need to find out the best levels of support resistance that we can rely on. So first one is 2062, then 2069. And if we cross back into this 2069, 2070, we should have no problem going back up towards the 2081.5, which at this point will be a complete reversal of today's sell-off. Can it happen with ES? Sure it can. Everything crazy can happen with ES. But we haven't seen that yet. So as long as now we are either churning or rotating or whatever below 2062, at some point we are supposed to exit to the downside by breaking this low of 2040, and then the next level down there is really not much below 2040 except very close to 2000, 2005, 2008. Now for crude, finally this very brutal wave of destruction came to a temporary halt today, and not that the supply and demand picture has brightened or anything like that. It was solely and purely due to the fact that there was a sell-off in the dollar, and as the dollar weakened, crude gained back a little bit of the pricing that it lost during this whole dollar rally of multiple months. The big level to break on the upside is still 42, because that's from where last time we saw a severe rejection down, and then again today when we approach 42, rejected very sharply down. If this is going to be a real trend reversal, which I am not sure that it is, because I think they didn't have enough time to accumulate good chunk down there in order to make this a real trend reversal. But to become a little bit more sustained to the upside, 42 needs to break up, and once we do that, two POCs targeted up there, 42.30 and 43.15. And now in terms of support, I really don't see anything besides 40.75, and if we are not going to contain that amount, that level, there is a little bit of support at 40.35, and then the three main ones are the one down there. Let's see a little bit about gold. Very troublesome that with all this sell-off in the dollar, that gold didn't participate on the upside quite more aggressively than this. Very disappointing little bounce. One would have expected that we would have seen a 50-60 points rally in it, but didn't happen. So really nothing has changed by much here. If I shrink the chart a little bit, yeah, trading range, for the upside we need to clear 1075 or 1074, and on the downside, if we do break below the 1045, then 1030 is my next level below, and then of course it's gonna, just for the sake of it, go touch 1000 to see what kind of a drama it can create if it does it. And for the upside, 1074 needs to clear in order to go to 1093 and then possibly 1100. This was Reza with Profiletraders. Thank you for listening, and if you wish to learn my courses and join my trading room, you can do it from my website. Till the next time.